Thank you all for coming out. It's totally great. My name is Paul Sloan. We're trying to start doing these events sort of regularly, so it's really great to see a good turnout. And thanks so much to George Zachary, Dave McClure, Naval Ravikant. George has had a particularly good day. His company he's involved in, invested in Millennial Media, went public today. So we'll get to that. $2
billion.
$2 billion up.
George is buying for all of us tonight.
Yeah. 1999, 99%. What was the game? Anyway, so it's just a great time. I want to talk about startup funding in general. It's just companies, you know, we hear this over and over, really cheap to start a company these days. Lots of angel investors, especially given all the newly rich from Google, soon to be Facebook, and everywhere else. And lots of accelerator funds, like Mr. McClure.
Way too many. There's a bubble in accelerators. It's all overvalued bull. Oh, I'm sorry.
Is this thing on?
Yeah. It is. So it's a great time overall. At the same time, companies going public, Facebook about to go public, which I assume you guys can all talk about, but what that'll mean to the startup world. So let's just start off by asking, I'd like you each to answer whether this is a good time to start a company.
Oh, yeah, hell yeah. It's a great time to be an entrepreneur. It might be a good time to be an investor.
That's right. That's totally right.
George?
I totally agree with Dave. Right now, there's plenty of capital available. Everything I see says that the odds are tilted in favor of the entrepreneur as a category. But remember, there's a ton of companies getting started. Very few of them produce the humongous hits, but there will be a big chunk of them that produce pretty good hits. So I think it's a fantastic time to be an entrepreneur if you have a really great idea and if you're relentless and won't give up. That's the key part.
Yeah, I'm not as sure about it. I mean, I think there's an enormous amount of opportunity out there. It says, I think Mark Andreessen famously said, software is eating the world. So all kinds of industries that before were not addressable by software are now under attack from web companies in Silicon Valley.
A fantastic essay.
Yeah, so I think that part of it is absolutely true.
Are you playing games over here, Dave?
I'm actually trying to like tweet and promote your stuff.
Oh,
so
good.
give me
Live tweeting, don't bother with it.
When I was talking to him out there,
the
he was doing
hashtag
a deal.
is CNET Startup. We're broadcasting live. Please tweet vociferously.
There you go. Sorry, Naval.
No problem. And I think it's a lot cheaper to start a company these days, which is also great. But I think that's a permanent feature of the landscape that's not going away, and it's going to continue to get cheaper. The issues are that there are way too many companies attacking every space, so it's highly competitive, and that may not change either. And it's impossible to recruit. So basically, if you are starting a company, I would encourage people to be a lot more thoughtful about it. Make sure you're ready. Make sure you have an incredibly good team. Don't raise money unless you're going for the goal and you're in for 10 years and you're trying to build a gigantic company, and realize the failure rate has gone from 2 and 3 to like 9 and 10. So you just have to be much more comfortable that we're becoming more like a Hollywood type industry, where a few bands and a few movies are winner take all. So that's why I'm not unequivocally saying this is the best time ever to start a company.
So you just said...
Oh, come on, it's the best time ever to start a company.
Don't most good companies come in bad times, though?
I
mean, look at the talent crunch now. Engineers, hard to get.
I do think the best companies really grow, consolidate, share, and take over their markets generally in bad times.
I think the best returns come from shitty times, not necessarily the best companies.
Yeah, fair enough, that may be a good...
Best companies happen on a regular basis regardless of rest of market. Like the financing market is not correlated with entrepreneur innovation. You know, it might be correlated with a lot more shit coming to the market, and so, you know, the people who really have passion and really have great ideas are probably somewhat constant, and you might have a lot more crap in there with it during like big market times and less of that when there's low market times. But you know, there's entrepreneurs everywhere. And, you know,
the one part about a bad economy and a tougher financing market is it's harder for your competitors to get funded. A lot of times people think, oh, the goal is to try to get the money. And no, the goal is to try to beat your competitors, not just to the money, but to the people. So, that makes it a little bit easier in tough markets, because the relentless founder who says, I will not give up and I will win and I've got a really good, innovative idea, they tend to stick out and shine through a little bit more easily in the bad times.
So what do you guys look for? And if well, answer that one first. What are you looking for, since there's so many companies out there these days, and you all are looking for slightly different things?
Yeah, personally, I like to see technology businesses. Silicon Valley was built in technology, and a lot of the innovation layer that's going on today is at the design layer and the application stack, which is perfectly valid, it's fine, but I got in this business because I love technology. So I love to see companies that are doing hard things, and who have entrepreneurs and founders who are well-suited, matched to doing those hard things, and then hopefully it is or can be a big market. So it's for me, it's the intersection of those.
I would say we're probably pretty different than most other traditional VC focus. So we're not necessarily looking at big market opportunities. We don't necessarily acquire IP. We're mainly looking for smart people, as evidenced by great products. So usually our filter is, what have you built? And so by evaluating products, I like to say, product is a great mirror to the soul of the team. And so looking at product will tell you kind of what can they build, what do they envision. Even if it's shitty right now, it gives me some insight into where they're going in the future. We like stuff that's got simple revenue models, so we're not typically going for growth. We're going more for customer problem framework. We still do some things that are growth and some things that are, more fantastic and wild, but, right now, kind of looking a lot at education-related stuff, apps for kids 0 to 10 and moms and families, which we think is a big market and wildly underserved. Most everything we're doing is capital efficient on the building side and hopefully capital efficient on the customer acquisition side. Strong emphasis on online platforms. So Google for search, Facebook and Twitter for social, Android and Apple for mobile, probably YouTube and video. Sorry, I'm tweeting here. So yeah, I mean, there's been this sea change in kind of the ability to do customer acquisition online in the last 5 years. That's really just monstrous. And frankly, I don't think most investors have really understood that or taken advantage of that.
My answer's changed over the last year. And I think the most important reason why it's changed is, this might sound cliche or weird, but I remember the day that Steve Jobs died, and I said, what the am I doing with my life? Sorry, I have to TM that for you. And, I said, when I was young, I really wanted to change the world. I wanted to do cool stuff. And on that day, I basically said, I'm not doing anything unless I think the founders want to change the world, and they're compelled psychologically to change the world. And I also think it's a good investment strategy, because it tends to produce either big or bust. And that's the business that I'm in.
So it's pretty easy these days to raise small amounts of money, right?
It's going to be even easier next week, we hope.
Jobs Act you're referring to? Mm-hmm. And then we'll get to that in a second. Which,
by the way, Mr. Ravikant had a lot to do with getting that on the right track.
What about the Series A crunch people talk about? That's your field, right? You do a lot more Series A investing. You said last week, I talked to George, and that you said in a 48-hour span, you got 70 emails from pitch referring you, and you had some offsite, and there was a whole bunch of emails that had been sent from people you were doing startups with, and people started panicking that you weren't replying to them in a nanosecond.
Yeah, I was out last Monday and Tuesday with an offsite, and I had 70 emails. 40 of them were pretty serious summaries. A lot of them were seed-seeking venture. And I just can't, I'm not smart enough to consider 70 companies in 1 day or 2 days. I just can't. I can't think of that many. So, it took me throughout the rest of the week and the weekend to kind of sort it out. But the interesting thing was the tension in the air is definitely higher. So I had gotten some emails on Monday. On Wednesday morning, I got emails, hey, I sent you an email Monday, wondering if you got the email. And there was a lot.
Did you read my email that I sent you?
No, I forgot. Yeah. So that, that and the reactions that people were giving to me passing have changed. Usually people say, okay, thanks for replying. I had a couple people who just wrote back and said, great, you are wrong, and I'm going to prove you wrong. I'm like, I'm not even saying I'm right. I'm just saying I'm not ready to be an investor. So there's like, I can feel the tension. Like people are seeing that there's big money available, and people are feeling the gravitational pull to the money. So it's bringing out kind of the core behavioral characteristics of people. And heck, people want money. There's nothing wrong with that.
And so,
yeah, I think calling it a Series A crunch tries to create this impression that there's less Series A capital or there's something nefarious underfoot. Yeah. Really what's going on is just there's seed glut. It's not Series A crunch. Yeah. Series A is relatively stable to where it has been. Maybe slightly smaller, slightly larger, depending where you are. But there's just a lot more seed. And a lot of these seed companies, frankly, should either be merging, joining other seed companies, or not raising capital. They should be small businesses that are sustainable and grow under their own capital. But I think everyone is used to the old model of, well, first you do a seed, then you go raise a Series A. And I'm not sure that really applies to every company. Yeah. But, like an AngelList, we get 100 to 150 companies coming in every single day. So, we've got multiples of his problem that we have to deal with. And we have even less data to go on because these are much earlier companies. And out of that, we can really only pick and promote one or two. Like, that's it.
So
I think, Series A crunch is a complete misnomer. Like, yes, there are a lot more companies getting funded at seed that are going to get funded at Series A. That's always been the case. Fact of the matter is there's probably a lot more Series A going on now than there was 3, 5, 10 years ago. Well, maybe not 10 years ago. 3 or 5 years ago. And that's okay. I mean, like, there's a lot of that's going to be crap and shouldn't be funded. There's some stuff which is okay, and we'll find alternative sources of capital, either bootstrap, they'll have to charge and make some money, or they might find, seed or crowdfunding. And then there's stuff that'll be great and, like, goes to larger levels. I think what a lot of larger VCs are experiencing is, holy there's 5 times as much deal flow as I ever saw before, and I can't keep up with it. Right? And it is true that some of that is going to hit the wall, but the entire industry is way, way more efficient than it was 10 years ago. Like, we are not doing $5 million into stupid companies that are all, like, shoved into the retail market anymore. Maybe there's a little of that, but there's a lot more scientific process. Okay, we'll give you $50K to try out your idea or prototype. If you succeed, we'll give you $500K to go to seed. If you succeed with that in getting distribution or monetization, then we'll give you the $5 million round. So the entire industry is way more efficient. There's lots more good deals to look at. So for large VCs who are whining about Series A crunch, that's bullshit. And they just need to, like, ball up and sort of, like, basically become more efficient and become more scalable. Because, like, it's great for them. It's great for them to look at more opportunities. And
well, I think the new seed is actually $50K. That's the incubator budget. And then the new Series A is what we call seed today, and that should be around 300 to 500K, not even $1 million like people think it is. And the new Series A should be $1 million, not 3 or 5 million people like people are used to.
So why do you think those particular numbers?
I just feel like the costs have come down enough that you can hit the milestones that used to be associated with seed and Series A in those timeframes. So, I did a company in 1999, WebSpace, Opinions, and it cost us $3 to $5 million to really build our first product because we had to buy Sun servers and Oracle and run our own data center and write our own provision scripts and versioning control. It was just insane, right? So today you can do that while you're sitting at 500 startups or YC or Techstars in 10 weeks, 25, 50K. Yeah. And so, but it's the same milestone. Yeah. So that's what, to me, the new seed round really is. And just, people being what they are, it's like sticky wages, right? We haven't quite adjusted to the idea yet that those are the new checkpoints. And if you defined it that way, if you said a Series A is $500,000 or $1 million, then there is no Series A's crunch. There are lots of Series A's being done.
Right.
So why is there mania in the air then?
I think, the public market has been on fire since the fall. People have forgotten about kind of the major kind of macro headwind issues, which are getting worked out but slowly. Those are 2 of the reasons. In the Millennial IPO, I asked the bankers on Tuesday, what level of oversubscription is the book? And I thought they would tell me, the book is the order book for shares. And I thought they would tell me like 5x. And they said, it's 26x. And I said, they're lying to me. There's no way it's 26x. But they had They sold 10 million shares. There's 260 million on the book. And I asked them, why? And they said, it's a hot market. Now, what they didn't tell me.
Why shouldn't they price it up if it's over 26?
So this is what I discovered through this whole process is the investment bank's customers are not me, the investor, or the startup. They're the mutual funds.
Right.
So they have, the mutual funds will have relationships with the banks, and they'll buy the good and the bad. Not that bad, but some of the bad. So they're basically giving their customers some advance profit, if you call it that. And today there was a bunch of griping at the company, at Millennial, like, man, we could have raised 260 million instead of 130 million.
Yeah.
We got screwed.
Or raise
I
the
said,
same
okay,
amount
guys,
twice.
like, it's still the company's worth $2 billion.
If you want to look at it from macro down, you would just say that the global markets are awash with liquidity, because every central bank in the world is now printing huge amounts of money, and that money has nowhere to go.
Yeah.
And Silicon Valley, it seems like an efficient allocator, but can only handle a very small amount.
And the market's seeking growth.
Right.
When I talk to
Relatively speaking, it looks a lot better than real estate or financial services.
Yeah, I mean, if you pumped $5 billion into seed investing, just think about how many companies that funds. Oh wait, that's probably what we have today, right? It just blows the whole market into 5x the size it was before.
It was interesting the questions the bankers asked, because I was in some of the roadshows meetings. They're like, okay, so what segment you're in? The company said, mobile, check.
It's like,
what do you do
you breathe air? Yes, I do.
Yeah, we're the second biggest mobile ad network to Google. Okay, done. We're buying 10% position.
How old is that company?
5 years. 6 years.
Wow.
And Naval, why do you say it takes 10 years?
I think it takes 10 years to build a great company on average. There's always exceptions and outliers. I mean, you can always find an exception to anything. But I think it takes roughly, from what I've seen, for your average good company, not bubble environment, not riding some ridiculous wave, it takes 5 years to even get to the point where you're acquirable or you have a solid business. And then you usually have to stick it out for another 5 years until you can go public. But
I think it's shorter than that.
But if you hit a good IPO window, I don't. I've got another rule that's related, which is from the moment like you as an entrepreneur decide you want to start a company, it always takes about a year. Even though you think like, I want to start a company next month, right? Usually it doesn't happen. You need to find the right person. There's false starts. There's bad ideas. There's just a certain natural latency to these things. So to give you an example, if the number drops, if it takes 5 years to build a company, so many people enter the market and it gets so competitive that it takes 10 years to build a company again. So I just think there's a natural pain threshold below which too many people will show up, and it just gets arbitraged away. That's capitalism.
Yeah.
I mean, I have a different opinion, which I think building a decent product takes 1 to 3 years. Building a decent company takes 3 to 5 years. And I think, I'm not defining building a great company as something that has to be IPO-able.
So
yeah, it's a different definition. I mean, I'm talking about like the kinds that George says he wants to invest in.
George is looking at change the world companies.
Well, it's the kind that our LPs say, either you invest in this or I won't fund you.
George, would you like to be an investor in Twilio and Wildfire?
For sure.
And both of those companies are less than 5 years old.
Yeah.
And I certainly think that both of them could be IPO candidates. Obviously, I'm pitching.
But I think it'll be. I think you.
But Dave, how many do you invest in?
100 to 150 a year.
Okay. And so how many will be?
I'm hoping about 1 to 5 a year will look like those. That's why I invest in 100 to 150.
I mean, to be clear, when
I'm not gambling. I'm doing a quantitative model that looks pretty predictable from my perspective. If I'm aiming for 50 to 250 million size exits, and occasionally I'll see, north of $250 million stories.
And so do you look at companies and think, and try to think already where the exit might be?
No, I mean, I don't. Actually, I would say Eidensenka is really thoughtful and smart about that. He's like great about sort of like, when he's thinking about the investment, he's already kind of like trying to vision like, who needs this, how does this go? And I will probably try and learn more from him. I think about who's the customer, right? Will someone use this? Will someone pay for this? And I almost like smaller markets because there's less competition. Like we can make money on $25 to $50 million exits. That's not where I really want it to end up, but I think it's actually much easier if, let's say, I've got two choices, right? I'm building a product for women, right? Or I'm building a product for moms 25 to 35 in urban segments with 1 or 2 kids who own a car, right? Do you think you can build a more targeted product for this market or this market? How many women are 25 to 35 with 2 kids in urban markets with a car? Well, still a load, right? So like, if I can have less competition and build a more targeted product in this market and make money at it, well, hell, like go build that product. It's easier, right? I don't need to build a product for like 50 million women to like, go IPO. I can build a very reasonable, I'm thinking as the entrepreneur right now, but also as the investor. And so actually, I think what's happened is the internet has made us be able to be more focused on very niche markets, specific customers, and we can build better things because of that. And yes, there will be large companies, and there are still like great opportunities to find the next, let's not say Facebook, but let's say, I don't know, next Mint.com or next, other, niche product that is still a big win. Yep. But I think as an entrepreneur, I think we suffer from this disease in Silicon Valley, which is unless you're a billion-dollar exit, you're not a good company, right? And there's plenty of great companies that are doing meaningful, world-changing things on a smaller scale that will be $25 to $250 million exits.
Yeah, the reason that happens is just because of the nature of the venture market, which is the only liquidity really that makes a difference to a venture fund is an IPO.
Or a large equity.
The problem with it as an angel is even if you want to invest in a smaller company, you know that the most common problem with companies is no matter what they're going after, they run out of cash and then they need more cash and then they go to the VCs. The VCs say, no, it's not going to be big enough.
Right.
So you end up working backwards and even the angels end up only funding companies that are VC scale. And that is a fundamental issue with the market and the way the funding market is set up and the exit markets are set up. And I think some of those are starting to be solved by Kickstarter and crowdfunding might help with those and things of that nature.
But I think the exit side of the market is also an issue, right? So the problem that I would have with like the smaller exit is I need to find buyers, right? I can't take these companies public. And so in order to get liquidity, we have to find buyers. And I think that market will change in the next 2 or 5 years as well. I think
as these industries are under attack, they're going to be buying a lot more of these smaller companies, one would hope.
Yeah, well, and I think like things like second market will also provide liquidity earlier on for those companies.
What do you think of those platforms?
Big fan. So I'm an investor in CapLink. I'm a big fan of AngelList. We're an investor in a company called Trusted Insight, which is basically doing AngelList at one level up for institutional investors. There's another reason why I think Barry is awesome, but I think the market's got to be more efficient, and the only reason we can't be bringing IPO-sized things down is because right now there's too many regulatory environments around retail investors. So I think the reason you're seeing second market and other things come about is if you exclude the retail market investor and drop a lot of the regulatory hassle that is in place as a result of protecting the retail investor, there's a lot of other alternative sources of capital and buyers. And so second market's going to exist for things that are $50 to $100 million market cap and up, and that's a lot of companies. A lot of companies are that size and not IPO size. And that provides greater capital efficiency for the market.
So what about crowdfunding? What's it going to mean?
It's a tough one.
To who?
Yeah.
For people trying to raise money. Who should use it? What kind of platforms might exist? How useful will it be?
A lot more crap.
Yeah. Well, a lot of it depends on how it's going to be structured. If you read the bill that actually passed, it was a Senate amended version of the crowdfunding bill. It leaves a lot to the rulemaking of the SEC. And the SEC's got at least 9 months, possibly more, to figure it out. And so there's going to be a lot of periods of holding and comments and reviews and conferencing and so on, back and forth and back and forth. And it could work out to the point where every Silicon Valley company may want to raise a couple of $100K additional in crowdfunding, or it may be poison pill and you can't touch it because the liability and fraud potential is too high, and it degenerates into nothing. So it's anybody who tells you exactly how it's going to work out knows something about what the SEC is going to do that I don't know.
Tell me more about Angel. I'm sorry, go on, Dave.
I was going to say, isn't the current way that they were drafting the law that you have, they're going to say yes, but it requires regulatory approval for every Kickstarter or AngelList or somebody else that wants to do
Right,
that.
so it's actually quite complex and probably over the heads
Yeah, it's
of
a little
most
too
people
wonky
here.
for here, but it's an SEC regulated platform.
Yeah, you're going to be the fundraising platforms are like lighter broker-dealers, the way you can think about them. They have to be registered. The companies that go on there have to have audited financials. There are specific liability provisions around omissions and fraud.
Audited financials before?
Yes. There are, exactly, there are quite severe liability provisions around the disclosure of information. There are restrictions on the platform's ability to curate and market. There are huge caps on who can participate for how much, and the investors who come on require a training schedule.
I'll wait for you to say it.
The first,
There's a lot in there.
Let's. Yeah, I don't want to go into regulatory.
I mean, like, I think only 5 people in the world have actually read that bill. Like, everybody has an opinion on it. There's so few. I'm sorry?
None of the people that voted on it.
Well, you know, that's just the case as it is with all law. This stuff is very complicated.
Tell us about AngelList. How, with, as Dave said, more crap coming, how with so many investors out there, how do you keep it so that it's not...
Overrun.
Yeah.
You know, we curate quite heavily. Everything gets a listing on AngelList, but not everything gets noticed, right? Because you just collapse into the noise. So we do highlight, you know, sort of the best stuff, and the community highlights the best stuff through what it likes and what it's associated with. We have definitely raised the curation bar. The market itself moves very quickly. So, you know, 2 years ago, a Groupon clone was fundable. Then, you know, 22 months ago, it became unfundable. And then 20 months ago, a mobile app with no users was fundable. And then 18 months ago, it became unfundable. And so just the bar in the entire market keeps moving up. And we've raised the bar quite a bit to this point, where I think right now we'll probably send out, you know, 3 to 5 companies a week, whereas there was a time when we were sending out 3 a day. And we just think that, you know, we realize at the end of the day, what investors look to us for is actually keeping a high bar. They're not looking for more deals, to George's point. They're looking for signal, not noise.
Right. They want to know they're good deals.
Yeah, exactly.
Right.
I mean, I would say easily, like I've said it before, AngelList is like the most significant thing that's happened in Silicon Valley in the last 5 to 10 years.
Yeah, for sure.
You know, Paul Graham starting YC or building the modern incubator model, I think, was the first like thing. Well, Josh, I think, did a lot of stuff. Josh Kaufman did a lot of stuff at First Round Capital. George has done a lot of stuff with Quick Start.
Right.
But like YC really changed the model dramatically, and I think AngelList is changing the model dramatically.
Yeah, because incubators in the 90s were like, oh, we give you space.
Right.
And we take, and it's our idea, and we take 40%,
Yeah.
or 60%. Yeah.
It's just a very
Yeah,
different model.
unfortunately.
So, from a in entrepreneurs' perspective, what mistakes do you see most? Do they ask for too much money? Do they ask for not enough money? Do they raise money too early on? Do they go to the wrong incubator/accelerator? Do they?
Yes, 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 yes,
Okay.
and yes.
Okay.
Yeah, the list of mistakes is long.
And who's turn that off? Thank you. Sorry, go on.
The list of mistakes is quite long. Where to start is the it's a long list.
So I
it's,
actually
it's really about what they do right.
It's funny because when these guys were going through their criteria, or especially Dave was, of like what he wants to invest in, I realized, like, you know, I don't have a formula or model like that, and I've probably looked at more deals now than anybody on the planet. Right? We've got 30,000 deals on AngelList. I've personally screened probably 8,000 of them. The rest I've skimmed, and you know, there's no pattern matching because there's just too much variance. Each one is unique. And so what ends up happening is you start looking for 2 things. One is, surprise me. Give me something exceptional, right? Excite me somehow, because you get very jaded very fast.
Farmeron.
Right, exactly. Show me something I haven't seen before.
That was different.
Right, and then that was basically a bunch of hackers who used to be farmers in Croatia who had, you know, were hacking software for farmers. It was incredible. We saw it on AngelList. Dave found it through AngelList.
Like, wow, this is
as
cool.
did Seed Camp, and then it came here, and now it's a hot deal that just got done by a bunch of big investors. But anyway, so the first
Follow
thing
that path, everyone.
Right.
Cows, farmers in Croatia,
Right.
found on AngelList, funded in America. What a country.
But actually, scary, but now there are multiple farming
Yes.
companies.
Right,
So it's
yes.
crowded.
YC had a farming company.
Yes, they
Don't
did. I
they?
was going to say
Yeah.
that.
Farmers at YC.
Who knew farming's hot?
So, so first I would say the first thing is like surprise me. And the second thing is, bringing it back to what George was just saying, is don't screw up. And most companies screw something up. And you can catch it in even an AngelList profile. You're like, oh, okay, all right, that's what you screwed up. Okay, you brought
Give
in.
us some examples.
Or get used to screwing up fast. And
Yeah,
fixing it.
I'll just run down. I'll give you, like, I can go all day, right? But like, okay.
We've got to go to questions.
Yeah,
so go on.
tech company, too many business founders, visionaries, you know, no product, you know, just a product that you could have built in the time it took you to build the PowerPoint instead, right? It's, you know,
Too long a business plan.
Too long of a business plan. Tiny market, niche market to the extreme.
That's
you're going
okay.
after.
That's okay.
Way bad location, like you're in Tulsa, Oklahoma, and we're staying here, right? Founders are clearly not ready to go, right? They have no real experience in the space, nor do they have anything that shows that they have the experience in the space.
Long cycle time on product.
Long cycle time. Bad-looking product. Bragging about minor accomplishments, right? Burying major accomplishments.
Can't convince anybody else to join them.
Yeah, rambling 5-minute video. It just goes on and on and on, you know. Or and then they think they can fool us, right? So they'll do like cumulative traction graphs. Like, come on, you know, we look at 70 of these a day. You know?
Downloads and users going up over time,
Yeah.
linear. What
Right.
does that mean?
Yeah, actually.
Your traction is constant and not increasing.
All right, but companies that have good ideas, good team, seem promising, how do they figure out how much money to ask for or to look for, and what kind of mistakes do they make on that front? Because I hear this all the time.
So, I mean, what you're actually talking about is the pitch. And I think people overemphasize the importance of the pitch. They obsess over the pitch.
You have that vision chart, right?
Yeah.
It's like, what's the most important product? Or traction, sorry.
Yeah,
Traction.
so in my world, like, it's traction, team, market, product, social proof, and down somewhere at the bottom is the pitch, right? And if you have a great team and you're building a great product and you're going after something big, you will get noticed, you will get found. Even, I mean, some of the best profiles we pull out on AngelList, like you have like one team member's bio, you have a slight description, you have one graph, and you have one link to the product, and we're like, oh, that's good, right? And we'll email them to fill it out, and like come back and complete it. You know, we'll get you investors and all that stuff. But the pitch is highly, highly overrated.
I think we also see the opposite thing is now there actually is a lot of good researchers in producing a great pitch, one of which I've done. And now we're seeing, like, wow, a lot of pitches are starting to look pretty good, but I'm not sure that
they
the
don't.
product
They all
is
sound
there.
the same. You go to one of these demo days and they all get up and they all have their practice formula. Hello, we're like, that's not how you really talk.
Pitch voice.
Yeah.
Hello, we're about to conquer a huge market. It's
I feel dirty.
our traction is overwhelming.
That's basically sprockets.
Yeah.
I think if YC's done one thing wrong is they've shellacked all the founders into being identical clones who all present the same way. And I actually kind of want to hear the rawness of the person. Because the rawness of the person is the way that I actually connect to them and feel like some insight versus, someone who's clearly never presented before, basically just like acting.
Yeah.
And I can't connect to the founder. I kind of want to hear it. The good, the bad,
See my traction here?
Yeah.
Acting.
So, traction and
Facebook, when's it going public and what does it mean for startups?
Soon. Mark's in China and Japan doing the IPO book.
So what do you guess on the
I
timeline?
think, well, I don't think he's in Shanghai visiting with his girlfriend's family about 2 weeks before they're going to go IPO. So that's probably not why he's in China.
You think it's just a few weeks away?
I'm guessing weeks to single months.
Yeah, I think it's late April or May. And when we were doing the Millennial IPO, the bankers are the same as Facebook. And they said, we got to get this done by the end of March. And I said, why the end of March? And they said, we got a lot of other stuff we got to take care of. And I was like, I wonder what they're talking about. But now I figured it.
Well, on second market, it's now trading about 100
Well, they
billion, I
stopped
think.
it. They stopped it, right?
No, it still trades.
On Friday.
Yeah, they cleared 60,000
that's
shares
what they
last
cleared.
week. Yeah.
Okay.
No, it's still trading, and it's trading at about 100 billion. And I think at this point,
I heard it stopped.
Floating the whole market up.
no, it is. I got the report today.
That's probably true.
It's still trading. We can ask Barry. Probably can't say anything, but
Yeah, I mean, I think the rest of the
No, but seriously,
retail
what does it do
market
for everyone else? Does it increase the mania? Does it increase the panic of the emails?
increases valuation, probably across the
oh
board.
my God, how
So
can
that sucks
it's
for
gonna
you
go any
guys.
higher?
Well, I just meant for other companies.
Oh,
I'm saying.
okay.
The rest of the
Yeah.
market feels like, oh, everything's
But
good
does
with
it
Facebook.
increase valuation for companies that you'd invest in?
No. Well, probably helps us with our companies getting valuation. Probably hurts us in terms of valuation for new investments that we're doing. It's probably good for entrepreneurs. I don't know. I mean,
What do you
They're going to have a huge currency to buy things with, which
Right.
is going to
yeah.
motivate other buyers.
But they're not regular buyers.
No.
They're,
they're not.
very anti-acquisition, and when they
Really?
do acquisitions, they're small acquisitions, and they tend to screw the investors in the acquisitions. right? They will move most of the
What do you
purchase-
mean, Naval?
Well, they'll move most. The smart acquirers all do this now. For the acquihires, where you're basically buying
I don't
the
think
team,
that smart acquirers screwing investors is actually smart. I think that
the clever, right? The clever acquirers
being-
are moving most of the acquisition price into the package for the team, and the investors get their money back, maybe with interest if they're lucky.
Yeah, so
I've seen a lot of
if
investors
Facebook
now
and
are
Google
trying
and
to-
other folks are watching, that might work for individual angel investors. For those of us who are basically producing hundreds of companies on an annual basis, note for the record, that will not work. Thank you.
I think the smart investors are now starting to do multiples on the exits and the notes to cover for that.
Do we have a mic around? I want to get questions if people have questions. And also, I want to know if any other predictions. I want to know what you guys think the world looks like a year from now, or
International is very, very interesting.
what
I
is-
think
is-
international is way underrated. That's where the opportunities are as an investor. There are so many good companies internationally that are starving for good investors.
Yeah.
That is very
Pinterest, the new
smart.
Facebook.
I don't know, probably, yeah.
Yeah, I heard they went from 11 to 16 million uniques last month.
Questions?
Growing fast.
And just announce yourself.
Kareem, AK2 WebD3, and the next great crew in Silicon Valley, the WebD3 crew. What do you guys see as the next evolution of companies? Is it more efficiency and less cost and black swans? Do you see people being able to build cash cows that also scale like that inefficiently? Or is there something else that people are building, or you think is the next model that'll avoid actually, I think, a lot of the IPO constraints and twisting of this market? Because there's constraints on growth and scale and profitability, that the needs of the big animal at the top, which if we can get around it with crowdfunding, we don't just need them anymore. They need to go away.
So what's hot and cool?
What's the question there?
There's a lot in there.
Model. Where do you see the next model? Because we think we're looking at a model where you make profitability early like a cash cow, but also unlimited scale. There's a place to be able to grow as far as you can without the real big acquirer being I think if you just get the 60-70% margin, the winners.
Okay, we got it.
Yeah.
Yeah. So there's a lot of things which are trendy these days, and I would say still that social games and photos and to some extent deal buying sites. And
By the time you can spot a trend, it's too late.
yeah,
Right.
I think education and like families are highly underrated and very underserved. I think that market is huge and very monetizable.
Everyone's overeducated.
Overeducated?
I'm in the don't go to college camp.
Oh yeah, but that's why I think it's great to do education in startups.
Go ahead.
I used to be in software, and now I've been working on gene technology to treat aging, and I'm hoping to try and get genes, your genes that made you, and I'm hoping to do something disruptive there. But that funding system is very clubby, very old world, and it's really, really difficult. So one of the reasons I came here was to see if there could be some possibility of getting people interested in that kind of a thing.
So I don't want to, without talking about what your company is, but the question is, are there other kind of funding models for your kind of business? Or?
Yeah, for things that are, you could say, leading edge drugs or leading edge therapies.
If there's still a large capex, then it's probably still the same sources. If the capital requirements for those businesses have changed or are changing, then maybe.
I mean, there's tremendous technology and adoption and call it regulatory risk in those businesses. And so they still tend to work very much like they used to work before. And so you have to get through the technology risk for an investor by surrounding yourself with incredible advisors, university, researchers, validation. And so there's no shortcut in that industry for building up the credibility around you that will then get an investor to take the risk. And unfortunately, there's no shortcuts in that one. I mean, it's gotten a little better, but not.
I can do that. I mean, I can.
Right. No, I think that's great. But I don't, like we've put a few biotech companies up on AngelList, and some of them have done well, but usually they come in with 5 Stanford researchers attached, the father of this is, vouches for it, white papers. So they just need to have that technical validation, because we can't do that. And even most of the investors won't even spend the time unless they feel like there's a lot of technical validation around it.
Up here, go Nick.
So this question is for Naval, not to like put you on the spot here, but as one of the 5 people who's read this bill, or at least attempted to, I tried finding the latest version and I couldn't find it, but because there's so many versions of this. But are you guys definitively positioning yourselves to try and actually get through this process? Because I know all the investors I speak with perceive so. And so, are you going to step through all of these, bureaucratic steps in order to?
I mean, I think it's an open question. So we're definitely looking at it. We're definitely engaged on it. I don't know if we'll go there. I think we'll only end up doing it if we feel we can do it for high-quality companies, and high-quality companies will want to use it. And if we can do it with a lot of fraud prevention and checks in place.
And so
Talking about AngelList actually becoming a crowdfunding site.
Yeah, and so, are you concerned in any way that there's like this, race to capture the market? But because I see there's literally like 100 of these startups now that are trying to, that have positioned themselves for this marketplace. So do you think that what are your thoughts on them?
Every market's competitive.
All right.
Back there.
Naval's extremely well positioned. I don't think there's a race. There may be a race, but it's a fool's race if that's what's happening.
I mean, so this goes back to, I think at the end of the day, when you're building a company, you're always going to have massive competition in anything worth doing. In fact, the people who say we have no competition, those are the people you don't want to fund because they're in some niche market. And so what's much more important is execution capability and understanding. And so I think we have as good an understanding of anyone, and I think we have incredible execution capability. Anyone who hangs out in AngelList knows how fast we execute. So I'm not concerned about our ability to do it. All these people who are clamoring about it, sure.
Back there.
You talked earlier about the pitch. Can you talk about the quality, average quality of the pitch? And if you can compare it, if there is a comparison, to the days just before the bubble burst back in 2000 when, as we recall, prices of everything were going to the moon and people were throwing around some crazy ideas.
It's definitely much better than it was back then. I was around that bubble, and I was pitching during that bubble. And, it's definitely a lot better than it was back then. Someone tweeted, and I kind of, maybe I'm misquoting him, but I thought it was great. He said, every bubble ends with someone trying to ship pet food across the country. Right? And we're starting to get small variations.
Pets.com. Bought it.
But yeah, so
wrote it all the way down.
it's funny because there are now all these X in a box companies. That was your article in Startup Stats, right? You guys wrote it, and I thought it was a brilliant article. And you didn't make the obvious reference to Dick in a Box, which is a YouTube, the Saturday Night Live skit.
We put blank in a box.
Right. There's a Saturday Night Live skit around it. This is hilarious. Right.
This gentleman over here.
Right.
Back to your comment on international, what is your perspective on sort of VC and private equity in the Asian markets? A lot of good ideas. India, Thailand, these markets are clearly starved, underdeveloped. So what is your outlook and how do you do the due diligence?
Process. So we're actually modestly active in Asia right now. We've done about 15 or 20 deals across China, Japan, Singapore, India, Australia. I think India is a huge market. I think Southeast Asia, and particularly Indonesia, is a pretty big market. Indonesia is not terribly monetizable right now, but that will change over time. China's a big market with a lot of complexity. Japan's an underrated market, extremely developed and great if you know what you're doing, and not a lot of local encouragement of entrepreneurship, strangely. So we're actually extremely bullish on Japan.
Okay.
My wife's Japanese.
What
So
do you guys think?
I actually think like funding markets develop backwards. You get your mezzanine investors first, then your Series C, then your B, then your A, then your angel, then your incubator. Right. And so that's the bad news internationally. It means like if someone angel invests in your company, you're going to get stranded around out of cash because there's no Series A investor to fund you. So I think the logical model is for companies to get a little bit of traction internationally, establish an office here, and then make sure you have a foothold here for your full funding cycle, but continue to attack your remote market. And I think that model works.
George, are you involved overseas?
No. I won't fund anything outside the U.S. There's only one reason. It's not that I'm a U.S. centrist.
You guys are in one company overseas.
Well, we are, but I personally,
Where's
I
Millennial?
won't do it because of two main factors. One is
Where's Millennial?
Baltimore.
Millennial's Baltimore.
Oh, okay.
That's almost.
But I thought Alan, who's the founder, is in Canada.
Not really the founder,
Okay, all right.
So like the main reason is if I take a day off of or 2 days to travel somewhere, I miss
All those emails.
All those
frantic
emails and all those people trying to get a hold of me in meetings.
Okay.
I don't want to do that. The second reason, which is actually the most important to me, is I have young kids, and I try to be there every night to put them to sleep. And tonight I'm not. They're watching on the live streaming. And that's really important to me, so that's why I don't do things out of the
So
country.
is due diligence, do you guys see due diligence one of the challenges, or is that not a challenge? Is that easy to overcome?
The problem is most due diligence is people diligence, and especially in places like China where they're running one set of books for the government, one for the investors, and one real set of books. You have to be a local player, otherwise you're not going to figure it out. So it's probably going to happen with people establishing cross-boundary trust, right? Like I trust this angel in China because he used to work here and was a friend of mine. He invests in a company, then he vouches for them, and I can do the A.
Got
So
it.
these trust gossip networks have to be extended out far enough.
So we've
for it to work.
hired a woman in Brazil who's actually spending half time here, half time there. She's Brazilian. We're
That's why you
hiring
got those
someone.
cool slippers.
Yeah.
Yeah.
We're hiring someone in India. I mean, I think you have to have feet on the street. You have to have local cultural fluency, language fluency. You have to develop mentor networks. You have to develop angel networks. I mean,
I think the first fund that figures out how to do full cycle cross-border investing is going to make a killing.
Yeah.
But it's a really hard problem.
But
And it'll probably be done one country at a time.
Let's move on.
the
We have-
opportunity is definitely there.
you don't care about international very much. This is a really interesting topic. We should spend more time on this.
I just
not
want more
less.
people.
Thanks, guys. Appreciate it. Thank you.
We had one over here.
Yeah, I'm wondering if you guys have some perspective on the upcoming Facebook IPO and on the
Facebook's going to go public. They're going to make a load of money. We
Hold on,
all
Dave.
use it. Like, that's it. We don't need to like talk multiple times
No,
about it.
I'm asking, hear me out. My question is if the pricing and aftermarket performance of the Facebook IPO might set the tone for future funding valuations for companies down the road.
Yeah, maybe.
It's a factor.
Next.
Facebook's a big-ass company. They're doing really well. They're going to make a lot of money.
I think Dave should have invested, but didn't. Go.
Okay.
I used to work for one of the guys who was one of the biggest investors in
Yeah, I
Facebook.
know.
But what's hilarious
okay.
is over a long timeline, the venture business on average barely makes money or loses money depending on whose stats you listen to.
But
So that
Facebook
means-
is...
That means for every 10 or 20 or 30 billion made in a Facebook IPO, it gets reinvested in a frenzy into startups and gets lost over time. So just keep that in mind, right? So yeah, that's the effect. Right?
But I think Facebook is distorting what's going on. Like, Facebook is this once-in-a-decade really big business that makes a small number of people a large amount of money. And the actual trend is venture is getting a little bit more scientific. We're getting smarter about this business, and it's easier to create $25 to $50 million businesses with regularity. Like, that's what's really interesting and what's going on, and why it's changing the dynamics, because it's actually harder for large funds to make money now because it's easier for entrepreneurs to exit early. They own more of their companies. They're more efficient about it. Like, that's what's cool. And like, crowdfunding is challenging seed investors are challenging A-round investors are challenging B-round investors. Like, there's efficiency throughout the whole system that's going on. Facebook's this big anomaly that is more the old world, not the new world.
Yeah, so that's the most interesting thing. You know, people keep talking about the Facebook, but like, okay, how many people here are really still obsessive users of Facebook or have moved on to something else? See, yeah, for
It's
me,
over. Facebook, you heard it here first.
No, I mean, it's not over, but it's gone so
Shorting Facebook.
No, it's gone. Facebook has gone so mainstream that I think most people here have moved on to a Twitter or a Pinterest or whatever.
But
or
we're
a Path or a
the
Highlighter.
edge.
Yeah, I get it, but that's what I'm saying. I don't think Facebook is that interested to talk about here.
No, agreed.
Like, it's not on the edge anymore.
Okay, next.
Okay. My name is Elias. I'm owner of a newly started app company called Absinthe Media, based out of Oakland, and we created a generative music system, and we were able to leverage interest from a lot of people. That kind of got us in a position now where we have a little bit of capital that we can either A, invest into trying to lawyer up and do the patent thing, or just actually develop it in pushing the product forward.
Develop.
You know, so I just kind of want to know what the take is on that and to promote. Okay. Simple answer.
If you want to spend a little bit of money on provisional patents, fine.
Develop.
But I would love to just hear that process out because
Develop.
it seems to be like a murky territory, and I'm hearing a lot.
You can accost these guys afterwards.
Develop. Don't accost me. I'm just going to say that one word.
If you fail to build an interesting company, the patents might be worth something when you're trying to sell.
Because we're in a situation right now where we have access to people.
Okay, come on, seriously, enough.
Fine.
Let's just spend afterwards.
Build
Just
shit.
Run out of time.
Startups
Bullshit.
cannot monetize patents.
Do you have one over here, Mr. Google?
Actually, I have a question first.
Yeah.
Oh, I'm sorry. Go ahead.
All right, no worries. Good evening, gentlemen. My name is William Clements. I actually have a two-part question. Just looking at how most startups are focusing on serving consumers or the B2C model, do you feel that there's still more opportunity for growth and for success in that particular part of the industry? Or should we be trending more so to B2B type businesses or enterprise, serving enterprise clients?
What problems do you have? What customers do you know?
Yeah, see, I hate these questions because it implies that you're so flexible that you could do one or the other. And like, it just doesn't work that way. Either you really love something, know your market, are passionate about it, have a product in mind, or you're not ready. You know, you shouldn't be that flexible. If you're that flexible,
Oh, this is not about me being flexible. This is more about evaluating opportunities. For example, when we look at most of the startups right now, they're usually, it's a consumer application. It's for consumer consumption.
You can make money in both areas.
Yeah, you can
like,
make. So actually,
solve the
this is
problems that
interesting
you have and the customers.
George's 3 claims to fame recently are Twitter, Yammer, and Millennial. And what do those have in common? Nothing, right? One's an enterprise software, one's a consumer, and one's a mobile ad. You know, they're like completely different. So I think you can make money anywhere.
They have to do with people using the internet.
Yeah.
Good starting place.
Right.
Over here.
Second question with regard, second part to it is that with regards to looking at startups that you're looking to evaluate, how sophisticated of a monetization strategy or product roadmap are you looking for them to have in order to take them seriously?
Do you want a business model?
I don't need one at the beginning, but I would like to know, like, what's the product, what does it do, and who's it valuable to? That's kind of what I need at the beginning.
We like to fund things that are simple in revenue model, either transactional subscription or affiliate driven. But more important is there a customer, is there a problem, or is there a strong desire? And like problem, desire, proxy for future monetization. So if that's clear, I don't need to know how you're making money for the find me a nanny for my, mom. Like that's going to make money somewhere.
One thing I've learned is that if you have some nagging hunch that you haven't figured something out about your business model when you start a company, you'll never figure it out. Like usually the good entrepreneurs already know where they can make money way down the road. Now it might require that they have to hit media scale and hit 100 million users, but they know that it will make money at that point at the end game.
Yes,
so
sir.
you guys touched upon how education is a bubble, kind of this theme that Peter Thiel
I don't
throws
think so.
out.
He said that.
Yeah. So I understand how that kind of works, but I think it's a bit myopic because I don't think everyone can be an entrepreneur. How do you think this will work for the 90% or whatever percent who don't want to be entrepreneurs? Do you think
Are you talking about education in particular? Or
higher education?
higher education.
Yeah. Where do you think it'll go? Do you think there's room in the government, or do you think this will be disrupted?
Look, I just think higher education as set up is a scam, right? It's a brand-based network effect. So everyone has to go to college because you won't hire anyone who didn't go to college, so everyone has to go to college. So the colleges figure that out, so they raise prices 5-7% every year with no end in sight. And
Isn't that like a top-tier VC, though?
No, but so
Yes.
I think it'll get replaced by.
We lower valuations 5 to 7% every year.
It'll get so what's going to happen is obvious, which is what is a college education? They'll start getting debased because University of Phoenix or whatever, you go online, you get accreditation, you'll take self-courses, and eventually we will route around this brand-based monopoly that the college system is set up. That's all I'm saying.
If you believe Mark Andreessen, he thinks all these schools will be totally global. And that you can, people in Cambodia will be getting MIT degrees on their smartphones.
I think it's going to happen. I funded a company called Udacity, which is one of the faster growing online universities, and one of the co-founders was a professor at Stanford, and he took me through a model which basically showed that 75% of the cost of a Stanford degree has nothing to do with getting an education.
Yeah.
It's real estate, it's facilities, it's admin, and it's about the admin hiring admin. In fact, I've seen the emails, which is inside of Stanford, they're hiring admin to support more admin so they qualify as a nonprofit. It's huge profit for the people running it. It's not a nonprofit. So, I think one of the awesome things with Udacity and the other competitors are we can educate the world's population. If that's something I can do with my life and back those people, that is great. That is so inspiring to me to change people's lives. And we have emails from people all over the world saying, thank you so much. Like, I've never had a company where the user reaction was that positive, and like, if I get to do this as a job, fund people to do that, that's my dream.
I hope in my lifetime we'll see people able to take a test and just get a college degree. Like you just take the test and like, yeah, you're good enough, you got it, here you go.
Higher education itself, I tend to agree with Peter that it's mostly bullshit. Like I really think, well, we funded a company called University Now that I think can do some interesting things at a broad-based level, and like trying to make that efficient and less costly and make that available online globally is important. But I think the way more interesting part of the education market is kids 0 to 7, maybe up to 10 or 12. Like that's where you actually do real learning, meaningfully learning. And then like 12 or older, it should probably be vocationally oriented, where like at least in most parts of the world, it actually raises your living standard. Like the things that are important to do are try and figure out like prenatal healthcare and education at 0 to 3, 3 to 6, and you've solved 80% of the problems if you do it before the age of 6.
I just want to say thank you for Udacity. I love the product.
Oh, thanks. Thank the founders.
Hey, listen, I have a quick question that a couple people emailed me about, which is that they're concerned about being over 45 or 50 and wanting to start something.
I better not start something.
Keep your mind young.
I started a fund when I was 44.
No, seriously, will you fund guys who are, or women who are older?
Yeah, we have.
Yeah.
We do.
Assuming they're active and they have a lot of energy to put into a startup.
That's part of it.
I'm 38. I'm doing a startup. I hope I'm fundable.
Right. I give you some money.
Quick question here.
Question back here.
Can you talk about, besides the obvious situation, in terms of your actual capital investment for entrepreneurs, what else are you bringing, or do you bring to the table for that entrepreneur?
It's a good question. For an entrepreneur, what should they look at other than just the cash?
I bring nothing.
Oh, come on. You bring a lot.
I have no time.
So, I mean, I think that's where, again, there's a real opportunity for innovation. So we're trying to bring design and usability services on our staff. We're trying to add distribution services on our staff, trying to have distribution internationally as part of that. I think it's interesting how many large VCs are not reinvesting in infrastructure and resources. I think Andreessen Horowitz.
There's like 2 that are
Andreessen Horowitz does a really interesting model where they're trying to build.
First round, and that's it.
And first round's done that. I think there's some other smaller folks doing some interesting stuff, but not too many.
So that's the interesting innovation in the venture business, which is that the incubators are building infrastructure to help their companies as opposed to just trying to help them with advice. And I separate out smart money and dumb money not based on the value they add, because if a board member can walk in one day a month and teach you stuff about your business, then you're not good enough to back. And you need to go back and learn more. So
wait, that was board seats are highly overrated?
No, that's not it at all. So to me, what board seats are about is about investors supporting the entrepreneur. So really, smart money versus dumb money is when you get in trouble, will this investor back you, bail you out, believe in you, take you to the next round, or are they going to hassle you, harass you, make your life miserable? And if I'm selecting an investor to sit on my board, I care far more about supportiveness than about value, than about intellectual value add. I'm not looking for my board member to come and solve math problems for me, which is, I think, sometimes how a lot of entrepreneurs tend to approach their investors. I think it's just silly.
Yeah, chemistry with the investor is, with the person on your board, is critical. If you don't have good chemistry, do not take their capital.
Completely
Just
agree.
like anything else in life. If you don't have good chemistry with the person, do not get involved in whatever way you like.
Do not have a smart jerk on your board. You will regret it because they will screw you. And they'll be really good at it because they're smart.
I think there's a ton of specialization and innovation to happen in venture, and I think we're seeing that right now. So I think you're seeing incubators sort of morph into like healthcare focus, education focus, tech focus, platform focus. I think that's a good thing. That actually is the natural evolution. And I think there are some large and innovative VCs which are experimenting with the model in interesting ways.
Time for one more?
Sure. So in the whole online internet space, the playing field is really level right now, and SOPA and PIPA have kind of died down a little bit, but the telecoms and media companies are going to keep trying to make it, either pay to play or fighting against net neutrality. Do you guys feel any responsibility as kind of figureheads, or should there be a more cooperative lobbying effort to kind of stave off these kind of attacks on something that could really hurt this entire industry?
So, I've spent some time in DC recently, and at AngelList, we definitely were vocal against SOPA and PIPA, and we ran some campaigns, and we were very active on the Jobs Act. And I can tell you that DC now knows Silicon Valley exists. And
yeah, because we've got money, and they want it.
Well, we've got money, we've got a voice, and I think they're definitely paying attention. I don't think Silicon Valley is that organized, because by nature we're all sort of individuals, and we all like to do our own thing and compete and all that. So we're not an oligopoly like the MPA or the RA. We're going to band together and have a common lobbying effort. And I think it's silly to even try. I see all these grassroots efforts to combine Silicon Valley, let's get together. It just doesn't work. It's not in our nature. But what I think we could do is we can build a few internet scale tools and scorecards and tracking systems that allow us to project the voice of millions very quickly and very easily. And I think that's all we need. And I actually think startups will do that. I think there are smart startups that will figure out how to project the Silicon Valley voice, and they will figure out how to get paid for it.
Beyond Twitter.
Beyond Twitter, yeah, because Twitter doesn't aggregate. Twitter doesn't unify. So here's an example. I think it would be amazing if someone built an iPhone app that if you are a representative, and by the way, all the reps are on Twitter, or all the senators are on Twitter, and you can get up and you can say, okay, what do my constituents think of this bill and this issue? And it tweets out, and it goes to all your constituents, and then they answer, and then automatically adjust for their demographics, like, okay, based on people in your district, they live here, geolocation, map. Here's the votes, 57% of people in your district want you to vote on this bill.
I think
that simple app alone would change the world. I've talked to the House Majority Whip, and he said he'd adopt it tomorrow, and he'd force all the Republicans to adopt it. Right? So it's just waiting to be built. I think
we invested in a company called Votizen that's doing something like that, but there's several companies doing basically campaign electoral sort of aggregation.
So I think Silicon Valley, yes, we should be vigilant, but we're better off now than we were before.
I think we're out of time. Thank you all so much. You heard it here first. Facebook is a fad. And don't work with smart jerks.
Do not quote me on that.
Good day.